Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Night video for September 11th, 2018. We do have a pullback. We're talking plays for the bounce off of daily chart support. We're getting that today's session. We'll take a look at the broader indices, S&P, Nasdaq, Dow, and Russell, and then drop down to individual stocks that we're getting bounce plays in. We discussed this last Thursday with respect to technology. Apple and Amazon, just to name a few, along with Microsoft, they were into trendline support. We'll talk about what the resolution is and the trades coming up right now. Now we'll take a look just at our daily chart here. This is our S&P. We are above the 2018 high. We have bounced off of it. It's roughly 2870 in the S&P futures. We still have this rising uptrend and parallel trendline channel. What we were watching in the last few sessions was, number one, a pullback down away from the 2900 level, just like the other ones in 2018, and all the way toward our target of the 20-day moving average or the prior price high. That's roughly 2870. We did have that flag or bull flag or just a simple retracement toward our support target. That gave us a bounce buy bias, and that is taking place in today's session as we see on our hourly chart into 2870. That looks like a bull flag, but either way we look at it, it is a support bounce strongly, maybe even stronger than expected, in motion here on Tuesday, and that is breaking through a bull flag trend line. Our dominant thesis will be for a continued bounce up toward just shy of 2900, really above 2920. That is, if this market can continue the rally we're seeing now, additional names probably join the rally and probably trade beyond the highs. The alternate thesis and the thing to be watching, managing any stops or hedge positions, is if the market just turns and reverses beneath 2870. That's the alternate thesis at the moment. And that would trigger really beneath 2865, 2860, and that opens up a bear thesis or alternate play to the 50-day moving average, reference over here in August, and that's 2840, 2845. That's our S&P play. At the midpoint, we are looking for a bounce. In the Nasdaq, the bounce, this was again from Thursday night's Theo Night video, was played off of our 50-day exponential moving average, or just a trend line spot. Again, that's roughly 7,400, 7,400. That's just a roundie. And the market hit that support. Again, a couple days of a trick trap bull trap up here, but then the retracement occurred as expected. Well, maybe one day after expected, but nonetheless, the pullback did take us toward our support target. And from Thursday's video, we are looking for a bounce play. That is at the moment occurring up away from 7,400. We can take a look at volume profile charts to get a sense of why we were looking for this. And this is just a value area extreme, 2870, 2875. It's the lower end of a range. And we're getting this lower value area extreme with an expected push up away from it toward, number one, the point of control at roughly 2900 or the prior high. If you follow profile logic, this is a pocket. So the market is at the moment today's session moving up as expected through a pocket. That means we get rapid action, potentially even higher. That's our bull flag zoomed in on the 30-minute chart. And these bars are just volume that transacted at a particular price. We're looking for high volume nodes as targets, low and high, and open air pockets for the price to trade rapidly. In the Nasdaq, we might see a better case for a bullish bounce because the point of control was roughly 7450, and just above 7400, the roundie, it's about 7415, value area extreme. This looks like a rounded reversal or a support bounce, or if we want to go ahead and draw that little flag trend line, we can do that as well in the Nasdaq index. However you slice it, this is pushing up through our open air pocket away from one high volume node or value area, potentially up toward the next one. That's the logic on that. Now, you can trade the indexes with options, puts, calls, spreads, in-out spreads, or just regular plays in the stocks, or trade these on an intraday basis should the market continue trading higher. We can do that on the indices once again, or through individual stocks. Just to update us, Amazon. So Amazon, we were calling for a potential, well, first pullback, and second, bounce rally, again, Thursday night's video, off of the 1930 per share level. That's our 20-day moving average, but today surprised us with a little downside gap just shy of our larger trend line pattern. It's a rising parallel trend line channel. And Amazon at the moment is, as would be the dominant thesis, to keep this trend going, pushing up away from it. First target, 2,000. Really beyond that, 2050 or just a little bit higher. And we just don't be fancy, but just take a look at the prior rallies and pullbacks. We call these rallies or higher highs, and retracements or lower highs. Rally phase or pro trend, and then counter trend or pullback. Rally, pullback, rally, pullback, and if history repeats itself, we'll position into additional upside action away from 1930 through 2000 and maybe even to 2050. The same logic will apply for Apple in terms of the chart, that is. Now, this was a stronger breakout than Amazon, and it took this stock a while to pull back to our 20-day moving average. That's a clean swing trade buy, and that roughly was 2018 per share. We are seeing bullish activity and a rally up away from it. One thing to watch with Apple in terms of our option plays, if you're doing straight calls or selling premium, is that we do have a special event tomorrow on Wednesday. It's the Apple product announcement, and we'll see what they say about any iPad or iPhone or Apple TV or anything else they do. But the options are pricing a little bit higher implied volatility and higher prices for immediate or near-term options. That is something that Amazon and other stocks that you might trade do not have in terms of major news announcements or product announcement, or just maybe think of it like an earnings play where we know something's going to happen or be said. We just don't know what it's going to be and how the market will react. So either way, implied volatility and the expected move will be higher for shorter term option plays into Apple as opposed to Amazon and other names that don't necessarily have that volatility bump or that implied volatility bump in the near term plays. However you slice this, we are looking again for additional upside action as the markets rally from our support levels, and we'll finish up with Microsoft. We discussed that one as a bull bounce play, and that was similar to what we saw in the broader Nasdaq. Microsoft still is in an uptrend, but pulled back, retraced to its 50-day moving average, 107 per share, and like the Nasdaq, maybe even stronger than the Nasdaq, it has pushed away from it. All right, this is Corey Rosenblum for Theo Night Video, September 11th, 2018.